Hey everyone, welcome back to another video. On this trade, we have a short bias based on a 3-minute time frame. I opted for 3 minutes over my usual 1-minute chart because it not only allowed me to better filter out price movements, but also provided a clearer entry. As we look at this time frame, we can easily identify that price has reached a period of distribution at the top of this 35-point surge. In fact, after the two liquidity grab expeditions up here, which as you can see mark our range's structural peak, the breakdown through this support area signals a reversal and the start of a downtrend. This repricing indicates that selling pressure has for the time being overcome demand and that the path of least resistance is now downward. And as you can see from the chart, after some choppiness around the mid 3690 area, price breaks to fresh lows, dipping below the 3665 level at high value. The market then shifts direction with buyers sending in bids, providing support to meet the selling pressure and at the same time kickstart a 40-some point move to the upside. However, based on the exhaustion of this recovery that peaked with this spike, and its failure to retest, let alone break through this resistance zone, it became apparent that this upside wasn't going to last. Furthermore, we have price printing lower highs as it reverses to the downside. So with this in mind, we should look for opportunities to enter a short position, given the current technical setup suggests that a bearish trend is developing. It's worth noting here that while this may look like a good time to short, it's important to always wait for more confirmation before actually entering any positions. The confirmation in this case came in the form of a break in market structure, and as you can see, judging by this abundance of supply, or this almost uninterrupted downward price decline, which is almost guaranteed at this point, I think, to at least fill this imbalance zone down here, it is safe to say that the market is about to get weaker, if not puke lower. So based on these indications, I decided to enter this trade short. Again, guys, and before we move on to the next trade, I think it's extremely important to remember that it's okay to have a bias. However, you can only enter a trade that follows your setup and offers a good chance, not a decent chance, but a good chance of making a profit relative to the risk being taken. I cannot stress this enough. Money is made only when there is full synchronicity between a bias, setup, and price action. If you don't have that sort of coordination in terms of your trading system operating in unison, don't trade at all, because that's where the money is lost. We are here to make money and not lose our assets. Okay, I guess we are done with trade number 1, so let's move on to trade number 2. Alright, so what we've got here is a 15-minute chart with our 140-point range marked by previous day's low and previous day's high. The price, as you can see, reverses lower following this algo-driven stop hunt and starts to establish a downward trend via these nosediving spreads. Another textbook smart money move then follows, with this redistribution segment absorbing even more liquidity from the panic selling retail crowd near the bottom of the range. From here, we have a measured and almost stair-stepping move to the 3700 region and into this 15-minute imbalance represented by this light blue rectangle. Also, note how this resistance level corresponds with the top of this imbalance. These are the zones where we can expect the price to react and potentially change direction. Obviously, the key level to watch now on the way down is this 15-16 point inefficiency, particularly after breaking this support area. My thinking, and as I pull a 1-minute time frame here, my thinking is that we can expect a wave of selling that takes us down to test the lows around 36.65. Now, the reason behind my argument is obviously based on price action. Starting from down here, we can see that the high of this mini rally into this imbalance zone helps define for us the upper boundary of this accumulation trading range. So this is basically our cap right here as far as this mini range is concerned. Furthermore, the double top combined with the price contraction indicates that the market is likely to continue bearish. In addition, this resistance acting descending trend line, which indicates that supply is increasing even as the price declines, followed by a break in market structure, show that selling pressure is likely to accelerate. When drawn correctly, a descending trend line can be an invaluable tool for traders and investors, providing clear indications of when to sell or short a security. However, it is important to note that trend lines are not infallible and prices can sometimes break down through them without signaling a change in direction. That's why they should be used in conjunction with other technical indicators to confirm trade signals. I'd like to point out that while the bias is still to the downside, I would only initiate a short position if I can get a relief mini rally into this imbalance zone. That would be my setup's final confirmation, since this would be a safe area to watch for a failure. If I don't get that pullback though, then there is no trade.
Order filled.
Well, luck seems to be on our side for the time being anyway, and as you can see, we have price setting up a strong PMG into the 3682 area. By PMG, which stands for pivot machine gun in strat jargon, I'm referring to 5 or more consecutive bars that print higher lows or lower highs.
Target filled. Stop filled.
I got pulled out of the market on the second contract, only to see price enter the imbalance area shortly after. Alright, so that does it for this trade. Thanks for watching, and if you guys liked the content, please make sure to like the video and subscribe to the channel. I'd really appreciate it. Thanks again, and hope to see you in the next one.